Finances, the big picture. There are specific financial practices that will maximize your current profit and grow the business. This course will help you see the big picture of your finances and understand the importance of using best practices to increase your profits. Module 1 is an overview of accrual accounting, including best practices and tips for implementation. First off, let's learn a little bit about cash accounting. When Tony and Maria closed escrow on a suburban veterinary practice, they rolled up their sleeves and went to work. They both met in school and neither had much training in running a business. The previous owner had always outsourced the accounting to a local bookkeeper, but she was preparing to move out of state. The couple decided this was a perfect time for a clean slate, and they began keeping the books themselves using the system she recommended, cash accounting. Cash accounting made a lot of sense to them. When a client paid, they marked the money as received on that day. And when a supply order was paid online, they marked the money as going out when they clicked send. For the first few months, the system seemed absolutely adequate. In fact, in the middle of their 5th month as owners, Tony took Maria to an expensive dinner to celebrate their best month so far, with revenue 3 times what it was in their 2nd month in business together. On the surface, things looked great, but underneath was a completely different story. A major problem was going undetected. What the couple didn't realize while they were enjoying their dinner was that business was actually trending down. They had just experienced their worst month in number of returning clients and their worst month for the number of new patient visits. So what was going on? Well, Tony and Maria soon discovered that having clients from months 2, 3 and 4 pay them in the 5th month actually hid the hard truth from them. And once they discovered this, they knew it was time for a change. Tony and Maria needed a way to see how their month was shaping up regardless of how many previous clients paid that month. They also wanted freedom of having a bad month just because major supply payments were due in full, despite the fact that they used those supplies for more than 1 month. Tony and Maria both realized the best solution would be to move to an accrual accounting method to help give them maximum financial control. So with cash accounting, you record payments when you receive the money, not when the services are rendered. This generally works for households, but can be absolutely misleading for businesses. Let's look at accrual accounting. Accrual accounting is different from cash accounting in that you bill others or are billed. So you record payments when items are received, and you record revenue when services are rendered. The accrual system is preferable for 3 key reasons. First, it gives you a better picture of profits during a period of time. Even if your cash reserves are low, you can look at the books and see your income statement and evaluate how much income you had during any period of time. Second, it gives you a better picture of your current financial position. No matter when you examine your position, you will know exactly that every liability that you've incurred is listed, and all the revenue that you earned up until that day is listed as well. Nothing is hidden in the future to surprise you. And lastly, with your accrual accounting, you take deductions for expenses when they occur, even if you pay for them during the following tax year. If you're ready for a change, it's not too late. You can operate with the security of knowing where you stand, but there are a few steps you'll need to take in order to move from the cash method to the accrual method. Firstly, once you finish your fiscal year, step 1 is to calculate your accrued income for that fiscal year. Step 2 is to add up all of your accrued expenses for that fiscal year, even if you've not paid them yet. After you've done these steps, subtract your expenses from your revenue to get your adjusted income, which will be different from what you report on a cash basis. Lastly, put all this information on the IRS form Application for Change in Accounting Method. It's helpful to file the form early in a new fiscal year. So which will you use? Imagine that escrow has just closed on your first veterinary practice and you are setting everything up for your grand opening next week. You need to decide which accounting system to use, so you call 2 friends who are both operators. William urges you to use cash accounting. It's all about the cash, he says. And if you use accrual, you won't know how much cash you have. I hate recording purchases in my books until I actually pay them. Well, that's one opinion, but let's ask his other friend Mary. Mary has a different take. Use accrual accounting so you always know where you stand. When an item is delivered, I record the price, even if I'm not paying until next week or next month. I hate surprises. Think about each approach carefully, and we'll go over some quiz questions now. Are you ready? Let's take a look at the first question. What is the weakness of the accrual accounting system? Well, you don't see a clear picture of how much cash you actually have. Question number 2. What is a weakness of the cash accounting system? Well, you don't see a clear picture of your actual financial position at any given point in time. And lastly in our quiz, why would you switch to accrual accounting? Well, you can immediately see how much revenue you have during a specific period of time. Congratulations, you've made it to the end of Module 1. Module 2 deals with effective management using a chart of accounts and talks about strategy, getting organized, why you should do it, and some handy tips to remember as well.